Morning and welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. So let's go over the events of yesterday and what events we had. There was talk of tapering, there was councils disbanded, and we had the FOMC minutes. So let's go through little bits and pieces of how the market played out. It was later in the session, the UK session, so around about 5 o'clock. So 5 o'clock, just before we had some comments from Dudley around saying that tapering was not too far off the horizon. And as we know, tapering is linked to quantitative easing, and quantitative easing, put my teeth back in, was all linked to the large-scale asset purchases the US did in order to stimulate the economy back in after the crisis. And now the taper now is where they have to judge short-term improvements in the economy with longer-term market expectations. And they're both basically, Dudley is saying now they are comfortable, or he thinks they're comfortable, to think about cutting back these large-scale asset purchases. Okay, thank you, Dudley, for that. Thank you for making a comment, one of the FOMC members, 2 hours prior to the actual release of the minutes. Don't do stuff like that. We have your minutes of the meeting from the interest rate decision. Let's have a look at that, and then if you want to make comments afterwards, make comments afterwards. Do not keep your mouth shut 2 hours prior to a meeting. It's just unnecessary. You don't need to make comments because we're going to see what the Fed is thinking. Right, but after that, we get the Manufacturing Council and Strategy Forum, which Trump created for all these CEOs. Everyone's leaving it. Everyone's left it. 17:56 BST yesterday. A tweet came out. CEOs have all left. And then Trump tries to catch a falling knife. Tweets 20 minutes later that he's confirming the Manufacturing Council and Strategy Forum is closed. He's closing it. He's disbanding it. Look, they've already done it, Trump. So what are you trying to say? What are you trying to do? You just made yourself look an even bigger idiot. So what happened in the back of that? So initially, when the CEOs resigned from the Manufacturing Council, the dollar sold off. And if we look at this chart here, we can see the euro appreciating because the dollar selling off. People are wanting out the dollar because, if your CEOs have no faith in your commander-in-chief, the person who runs the country, then why are they going to, if they don't have faith in them, why should anyone else have faith in them? So therefore, we had a slight dollar sell-off. We then had the FOMC minutes, which were, once again, didn't really indicate much. It was a bit of a kind of toing and froing of most Fed officials saw inflation pick up, but many Fed officials saw weak inflation due to idiosyncratic factors. I'm just reading the statement here. So one cancels the other. And looking at some notes over the key conclusions, over what was said, a lot are picking that September remains in play for the balance sheet announcement, though it's no specific timetable as we mentioned. And some Fed officials see scope for rate hike patience. So we've got people who are saying like September, we're going to have look at balance sheet normalization, tapering, reducing the large-scale asset purchases, and sorting out the deficits on the current account. And then others saying we have to be patient because we haven't seen the data yet. So September might be where they start talking about balance sheet normalization, but we ain't going to get another rate hike this year, I don't think. And if we do, it should be in December sometime. But I really don't think. I think they're going to be kicking this one around for a bit further. So as we see here, I mean, in the space of from 6 o'clock-ish up until 8 o'clock, the good old euro rallied a nice 80 pips. And let's have a just look and see how it's carried on this morning. Zoom in there. So yeah, I mean, we're back to the middle of the range where we are. We kicked on yesterday. We got to a high of 79, so 117.80, and now we're looking to move on again today as the dollar depreciates once again. Also with the dollar sell-off yesterday, our good old friend gold got helped out. I'm just going to bring that up in a 1 hour chart. So here was the Trump, and obviously the initial dollar sell-off, the FOMC, further dollar sell-off, gold appreciates, because obviously gold is priced in dollars. The cheaper dollars are, the cheaper gold is to buy, and therefore that people scoop up, when the dollar depreciates, people scoop up gold. And then into the Asian session, as always, the Asian traders like a bit of gold, like a bit of a shiny asset, and we see this continue today. Once again, we're coming up to that 1290 point, which was, if we go back to my daily chart, which was that third resistance. I still see 1217 on the upside. This is just such a beautiful chart, but if we just zoom in here, we can see that this has come up to this point again. Now, this potentially could be another selling point. Well, but with the stuff that's going on with Trump and the way the dollar is at the moment, I don't really know why you want to be in the dollar. Now, if we look at the equities and the Dow, for instance, on the daily, it spiked. Nothing really mattered. It was pretty much flat in the day there. And the comments that came out from him yesterday, and the CEOs all disbanding from the council, didn't really do much. However, the weaker dollar is getting overseas investors to pump into the US market, because the US market does have some good equities in it and good companies in it, and valuations people are saying are still a lot of them are still undervalued, and there's still some good bargains there. Other people say it's overvalued and it's a complete roll of rubbish, but people are just talking their positions there. If I'm long equities, I'm going to be saying that they're undervalued. If I'm short equities, I'm going to say they're overvalued. It's just common sense. So nothing really in the equities markets, and we saw the gold move yesterday, all based around lovely Donald Trump. What's out today in terms of economic data? We've got some UK retail sales at 9:30, Euro CPI at 10 o'clock, and then some Philadelphia Fed at 1:30. But apart from that, there's not really much on the wires today. What we are concentrating on is Twitter, is hot headlines all around Trump. He had an absolutely disastrous day yesterday, absolutely disastrous day. And the guy is so arrogant, and most megalomaniacs are, he does not see what he is doing. His press secretary yesterday, they were filming him while he was making the comments about Charlottesville, and the guy was sweating beads. I really feel quite sorry for him, because Trump is uncontrollable. He will just go and do his own thing. You can tell him to follow a script. He'll throw that script in the bin 30 seconds before he's supposed to speak. At the moment, dollar is off purely on this Trump thing and the FOMC. But the FOMC statement is a mishmash. You can infer that they're going to discuss balance sheet from the up and coming next meeting, and the up and coming next meeting is in September. Okay, right. So they're going to talk. The balance sheet normalization starts in September. People are just trying to make sense of something which it's not all clear. Just another FOMC of kind of mishmash of speakers talking before the release, which they shouldn't be doing, and of a president of supposedly the biggest and most powerful country in the world, just being a complete moron. For today, looks all set up for dollar depreciation and other corresponding asset classes of the euro and the sterling and the precious metals to rally. I wouldn't be surprised if the indices, Dow and S&P, all kick on from here as well, just because of overseas investors playing the cheap dollars back in. But from the front lines, it's me. Goodbye from me, and I'll speak to you tomorrow.